Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar yields, precious metals, and commodities ETFs that I follow. And I'm going to interject my financial opinions across the board. This is the last day to sign up with the 50% discount for the website. It's $25 for the first month, and then after that it goes to normal pricing. So if you want to try it out for a month, and then Jet, that's up to you, but it is 50% off, and it's the last time or last day to take advantage of that. And that's coupon code July 4th. So let's dive in. Let's see what's going on. We've got the DXY, the dollar, continuing to strengthen. What does that mean? It generally means that the dollar is outperforming other currencies. What causes that to normally happen? It's generally from increasing interest rate environment. When one monetary, we'll call it the monetary tightness of one currency versus another monetary tightness of another currency, and that disparity between the two monetary tightnesses generally is an indicator or a leading factor of how strong the currency is itself. So the dollar is going up. The white line is that big long-term support level that we've been getting support from, and we are heading higher with the dollar. The 2-year yield heading higher, and we are continuing to move on up. The 10-year yield rocketing out of its pattern here, breaking out of its pattern. We've got a pretty big move for that occurring, so it's most likely a clear breakout. You can see we came up to resistance, it paused, and then boom, we punched through today. So what does that mean? It means that we could see higher yields on the 10-year, and we're actually having a little bit of breakout potentially. TYX, that one already broke out, and it's continuing to move to the upside. Yields are getting stronger. I am in the camp that so generally speaking, if we're going to have this gigantic recession that everyone keeps talking about, I don't think that we would be seeing yields go up like this. I don't think that is a congruent statement. You can't say that we are going to go into some deflationary crash and have yields rocketing to the upside. That's my take. I don't know if we've ever seen that in history. Now, we've seen hyperinflation with yields going up uncontrollably, and we've seen high rates of inflation. So again, it's still in the inflation camp, and I think that we're probably going to see more inflation. It doesn't mean that the rate of inflation is going to be as high as it was before, but generally speaking, inflation and increasing interest rates go together. Crashes are generally, you'll see a decline in interest rates before a crash, a sharp decline. We're not seeing that. The TYX TNX ratio, the yield curve is still inverting, and it's inverting further and further and further. I talked about this being at a very low level, potentially that we could go higher, but that is definitely not the case, not with the breakout with the interest rates here, here recently. I think that we could potentially go lower and stay lower. You know, sideways to lower is what potentially could happen until these rates reverse. So bond prices continuing to head lower. We haven't broken out of this pattern yet, but I would be looking for a potential break to the downside if yields continue on up or bonds keep being, bonds continue to sell off. Looking at gold, these increasing interest rates do put pressure on gold. We are still at this location where we are basically consolidating. So we'll see what happens next. But right now, at least today, we were down a little bit. Silver up 0.86%. We're right at that resistance line of the longer term blue line here that I've drawn in. We're still at this resistance area. So we're chilling out underneath that resistance. We'll see if we can break on up, and we have not done so yet. Platinum basically moving sideways, And I do think that we'll probably base out for some extent. Do some trampoline jumps is what I like to call it. Trampoline jumps is where you hit on a support level like that a few times, and then we gather ourselves or consolidate and work off that downside momentum. Big picture view, platinum still looks very good. And in this general location, I think it's a very great spot to be looking at potential adds. XAU to gold ratio down 2.52%. So we're getting flung around here in the gold and silver mining companies. We had a nice good 3-day move, and today getting slapped on the butt a little bit. You know what I mean? Someone basically going by telling us we played a good game, but we lost. Good game, good game. It's okay if you do that as long as you say good game afterwards. But right now, yep, good selling pressure in the gold and silver mining companies today, and underperforming gold, and we still haven't broken that all important trend line for our happiness to be very happy in the gold and silver mining companies. CRB index up 0.73%, probably coming from oil. Oil was very strong today, but again, we are just literally moving sideways in this entire location here. What happens is if the markets are really strong, we consolidate sideways. This is consolidating sideways. If the markets are weak, what happens is it consolidates way lower. You just sell off. So I think that there's still strength in these markets. I think that we could still go higher because of the way that this is consolidating to sideways, not necessarily just falling off of a cliff, which would be a bubble type scenario. CRB to S&P 500. Now this is a relative relationship. We've been consolidating in the CRB, but the S&P 500 has its time in the sun. What does that mean? Well, generally speaking, if you look, generally you get a top pattern like a double top. It comes down, and then you get one last kind of surge higher, and then you get a final rollover. The opposite is true on a bottom. What you generally get is you get a bottoming, like a capitulation bottom here. You come on up, you get a bear trap that is set. As you come up, it rotates back, you get a bear trap, and then it really hurts those that still have the old mindset that normal stocks and NASDAQ is going to continue to go up. It can for a while, and I'm not claiming I know the exact timing in the short term. But generally speaking, you get kind of a double top-ish type pattern. You get one last thrust higher. That's the double top here. You get one last thrust higher, and then you roll over, and it's done for. That is exactly what's happening here, just reversed in a bottom. So commodities, I think, will rip it at some point. We're not there yet, but they will, and that will be your bear trap, and it'll squeeze all the bears that are stuck in there. It will demolish all the bulls on the other side, potentially, when that does come. GDX down. So the gold and silver miners all had rough days today. We could go down a little bit further. We're at support for GDX. GDXJ also getting that bearish engulfing. We could go down in the short term. We want to see how much selling pressure we're going to encounter tomorrow. If we get a nice big reversal candlestick, it means the buyers are there. There's your little reversal candlestick where we could go higher. Or if we get a bullish piercing, bullish engulfing, one of those, nullifying the selling pressure today. SILJ, it's the same thing. It's a lot of selling pressure. We could go down a little bit further in the short term. And we want to see tomorrow what the buyers have in store, if they have anything. If it's all selling pressure, we'll see a massive down day tomorrow, signaling that we could see further downside. Crude oil. Crude oil is breaking out to the upside. So one thing I want to state is when interest rates go up, it's generally an indication of inflation. Oil is the #1 inflation-sensitive asset. So what we're seeing is interest rates and oil being correlated, and that's generally what we see. We could see oil take off here if interest rates take off. They're both interconnected. It also rotates money differently with that interest rate going up. Money likes to go after inflation-sensitive assets, ones that benefit from inflation. So oil looks really good. And it looks like we're breaking out, and I am very bullish on oil. Natural gas down a little bit, but it's not huge selling pressure. Again, I still think that this is trying to put in some sort of bottom. and that we could eventually work our way on up. If we look at last market, we can see that we had a nice big run higher. We came back down, we consolidated for a little bit, and then worked our way back up. I think that's the same starting location as last bull market, and that we'll work our way up eventually, just like we did last bull market. XOP, yeah, you know me. What do we got going on here? We've got a trend line break. That's up there. We could go down in the short term. Again, I'm not playing these short term movements. I would be a buyer in this general location. Why? Because we've broken the downtrend. Oil looks like we've broken the downtrend there, and I think oil's probably going to go up. And XOP's already broken out. I think it looks good. OIH, the energy service companies, that also has broken its downtrend here recently. There's the breakout there. We've come on up, and we are in a new small little uptrend. I also think that energy service companies are probably going to move to the upside and grind its way higher. It doesn't mean every day is going to be higher. It doesn't mean that every month or week is going to be higher. What it means is that we're going to grind on up in an upward fashion. And when we get above some of these levels, we could accelerate that grindage to the upside. Here's your Batman pattern. It's a little bit of a retarded one. Here's your Batman pattern. That comes all the way down, and I think we are going to work our way back on higher. Sprott Physical Uranium Trust. I know we were trying to break out of this 1815 level. We got a little taste of it, but someone punched us in the face and brought us back to the downside. We're back doing our full retest move. Now we want to see the buyer step in and push us back up to the 1815 level and try to break it. That's what we want. There's our downtrend line that we're playing with. URNM also doing the same thing. We've broken to the upside. We've come back. We're just chilling. Notice that Sprott Physical Uranium Trust had large selling pressure. Our ETFs or equities are hanging in there. So we're hanging in there for these equities. We're moving sideways. It still looks okay for a potential move to the upside. URNJ also hanging in there, down 0.33%. I still think it looks good for a potential move to the upside. How long it takes? I mean, we'll find out, but still looking all right. TAN down 2.28%. Looks like we're just kind of chopping sideways here in this dead period, is what I like to call it, with the buyers equal to sellers. You go like this right before a big move. Now, could this fall back down like it did over here? Because generally speaking, when you go up, it goes and tracks the way that you had fallen. You have the same resistance levels, same selling pressures, all that at certain buy points and sell points. And that's why it does it, but it doesn't have to. But I think this will work its way on up at some point. COPX, again, we're just moving sideways in this channel here. We are just battling back and forth. Lithium's broken out to the upside. I am still of the ilk that this is going to go up. Why do I say that? Because we've broken the falling wedge to the upside. REMX is the same thing. We've broken this falling wedge to the upside, and I do think that eventually we will grind our way on up. My confidence would be even greater if we clear some of these highs through here. We clear up and get up here. That's pretty confident, inspiring to break some of those lower highs. So now then we're going to be going into higher highs. SPX just chilling. Still looks fine though. This is a small down day. There's not much selling pressure here. So I still think it looks good to go higher until I see some sort of reversal in that. NASDAQ, same thing. Still looks okay. Still looks like we could go higher until I see evidence that we could potentially turn. Emerging markets down 0.6% with that stronger dollar. I still think this looks fantastic for a potential move to the upside. I think interest rates are holding this all down. I think the increasing interest rates are holding a gigantic amount of demand, credit demand, down, which is holding these down at the moment. XHB down a little bit today, down. This is a bloody nose. This still looks good to go higher on a weekly candlestick basis. If we were to go to the dailies here, there we are. It still looks good to go higher. We've broken all this to the upside. It's just got small little down candlesticks. Still looks good to move on up. Moo also moving higher. This still looks good to move on up. I like this entire location. The green army is showing up. Small little red days all sprinkled in. That type of characteristic in the candles makes me bullish for this to go higher. Copper still chilling right at its strong resistance line. Looks like we sold off today, but it came back up. It bounced off its bottom. So buyers are there. Now it's just, when are we going to go? When are we going to move to the upside? When is the shortages in copper going to overwhelm the markets and inventories deplete almost completely? I don't know. We'll see. I'm a bull, and I think copper will go higher at some point. I just don't know the exact timing of it. And inventories are very, very low. Iron ore still chugging around. It's just kind of sitting there. Falling wedge broken to the upside. I do think we're going to work our way on up. That has not changed. Nickel looking opposite. I would say that looks like it wants to come back lower with this double top. And I know JP Morgan said they had to come in here and manage it lower. So that was kind of weird. But yeah, that looks like it could go a little bit lower there. Aluminum heading a little bit lower. Oh, so that's a bearish engulfing. That definitely looks like we could break to the downside with aluminum in the short term, guys. A little bit more selling pressure there. So I would watch out for aluminum to the downside. Baltic Dry Index still hanging in there, down 2.25%, but still hanging in terms of where we're at on a relative level. Falling wedge, false breakout, broken to the upside. I do think this is going to work its way on up. Newcastle coal futures consolidating sideways. That's where I think we're going to be for a little while. We're going to base out, and then eventually we'll find out where we're going to go, which is going to be higher. Ethereum down a little bit, but to me it still looks good for a move higher. Why? Big green candlesticks, small red candlesticks, right on the trend line. Looks like we're playing with the trend line, that this is a breakout retest type move going on, and we're sitting right on the trend line. I still think that'll go higher. Bitcoin's still looking good to go higher as well. Small selling pressure up here. Yeah, it's down 1%, but it still looks good to go up. This is just a big flag pattern to move on up. So that's what I've got for today, guys. That's what I'm seeing in the charts. Interest rates moving up. That's a big deal there. That's here. Let me get this. There we go. That's a big deal. When interest rates are moving on up, it prices assets differently. It puts pressure on a lot of things. Dollar going up, a lot of these assets are priced in dollars. Depending on where you're at, a stronger dollar may actually help dollar denominated assets, because someone who wants to take a position in American equities gets the strength of the currency and gets the earnings in American dollars. If in commodities they're priced in dollars, when the dollar price goes up, then the commodity has pressure to stay lower. Obviously, I think this is all done on purpose. If you don't want the commodity or inflate, if you want to hold inflation back, you make a strong dollar. You keep increasing rates, higher, 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 and then you basically slow down everything that's priced in dollars. So they're doing a decent job of managing that, in my opinion. Now, if we get a turn in the dollar, that's when the commodity bull market's going to accelerate to the upside. I don't know if they can completely stop a commodity bull market if it's supply driven as well. So it's going to be supply and demand. Demand's your credit growth. Supply is your supply given the credit in the system. All right, guys, that's what I've got for today. Thumb up for the content, subscribe to the channel, and we'll catch you next time. This is Finding Value.